I think that in the not too distant future, if you're a small business, for example, looking to take out a loan, you will no longer go to your bank. Right? You will go to a particular platform where you're already spending a significant chunk of your time, and the ability to effectively go from your banks being very reactive to being more proactive, to actually being predictive, is a big trend that is already happening now, but I think that's going to continue going forward.
Jeff, thank you so much for welcoming. Let's try that again. Jeff, thank you so much for having us here in your office in London.
No worries. Thank you so much. It's great to be here.
Yeah, it's great to see you again. Let's just get started. Tell us a little bit about who you are and what it is that you do.
Sure, very happy to, Chris. So Jeff Tijssen, partner at Bain Company. I have the pleasure and privilege of leading our fintech practice globally, which basically means I get to do all the cool and exciting stuff that we do as an organization, and we'll talk a bit more about that later on. I spent my entire career in financial services. So started my career as a private banker for ABN AMRO back in the days when ABN was one of the world's largest financial institutions. I had a phenomenal time there, worked with some incredibly smart people. If you fast forward to today, so I joined Bain about 2 years ago now. Before joining Bain, I spent 3 years at a company called 11FS, fintech consultancy. It was incredibly exciting too. So I ran the consulting business globally. It was incredibly exciting to have the ability to go and build that business from scratch. And to take that from a blank sheet of paper, a small corner office in WeWork, into the business that it eventually became, winning some incredibly exciting work with some of the biggest names in the industry. I've had the pleasure of working in Hong Kong, in the US, in the Middle East, in various other parts of the world, with some of the largest financial institutions out there. So I feel very fortunate to have had the ability to go and do that. I was in the founding team of a number of digital banks in different parts of the world. So building a new digital bank from scratch, starting with a blank sheet of paper, was incredibly exciting. And then to take those businesses from just an idea and then designing, scaling those businesses into some of the businesses that they become today was a fantastic journey. So yeah, it's been a roller coaster ride, but a very exciting one.
All right, so that brings me nicely into my first question, which is we all know Bain from the corporate world. We know that you have a very powerful voice within various industries, but in fintech, maybe that's a new thing, at least for me. So tell us a little bit, what's Bain's value proposition for the fintech world, and what are the main competencies or areas that you're touching upon fintech?
Sure, very, very happy to, Chris. So let me maybe start by explaining a little bit more about the types of clients that my team serves, because fintech for Bain definitely isn't something new. So there's really 3 types of clients that we serve in the fintech space. The first one is the incumbent banks, wealth managers, insurance players who, on one hand, are trying to make sense of what is going on in this space and what does it mean for me as an organization. Simple example, whether it's embedded finance, banking as a service, Web3, digital assets more broadly. A lot of incumbent clients come to us to say, well, what does this mean? I know it's something that we need to pay attention to, but how do we figure out where to play, how to win, what opportunities does this provide to me as an organization? But what we're also doing is we're not just doing the strategy elements of that work. We're actually helping those organizations to build new propositions, new banks, new platforms, new ventures. So new, what we often refer to as engine 2 businesses. So really, figuring out where is new growth for the organization going to come from. So that's incredibly exciting, and that includes the full design, build, launch, scale of those new ventures. Then we do a ton of work with many of the big fintech players. I had the pleasure of working with 3 of the biggest neobanks in the past couple of months, for example. And the nature of that work is largely focused on what we call full potential. the business is here now, you want to get to there, what does that journey look like? And if I take some of the neobanks as an example that we've been working with, the challenge for many neobanks is effectively exactly the same. It's pretty impressive that you managed to get to whatever level of customer numbers you managed to get to, but how do you grow average revenue per user? How do you better monetize your existing customer base? What's your plan around product and revenue diversification? How do you work towards sustainable profitability? Then what's your plan around further international expansion? How do you better segment your existing customer base given the typically high cost of customer acquisition? So that work is incredibly interesting and exciting, where we have the ability to actually work with the founding team on some of their most pressing strategic issues. And then the third pillar is on the investor side, where we are by far the dominant player in this space. And that really is a mix of commercial due diligence on behalf of some of the biggest investors in the world, some private equity investors and growth investors, as well as post-acquisition. And just to give you a feel for the dominant position that we have in this space, last year we were involved in 80% of all the top fintech deals globally.
Okay.
And why that's incredibly exciting is we don't just have the ability to work with many of the world's leading investors, we also get to do a lot of work with their portfolio companies. So it's a really nice, diverse mix if you look at the types of clients that we work with in the fintech space.
Right, so you cover the technology side of the incumbents, you cover the new entrants to the market like neobanks and challengers, and the investor sides, basically the entire ecosystem.
Correct.
Right, okay. Now, having worked so extensively and globally, you must have your finger on the pulse on really what's happening in fintech globally, perhaps even beyond what we see here in Europe, which it's its own bubble in itself. What's the trend that excites you the most from what you've seen globally?
Yeah, that's a great question, and you're absolutely right. I think given the position that we're in this space, we really have a front row seat in terms of everything that's going on, and that makes it really, really exciting. To have the ability to scan the market and looking for the next big thing, and some really, really interesting and exciting companies that are happening in the fintech space in different parts of the world. In terms of key things or key trends that really stand out for me that I'm particularly excited about, not that long ago, so a couple of weeks ago, we published a report focused on embedded finance, which we co-authored together with our friends at Bain Capital, with Matt Harris and his team, which are just a fantastic bunch. As part of that work, we interviewed over 50 of the leading players in this space to really get their perspectives on why is embedded finance such a big trend at the moment. How do we think the space would evolve, and where are effectively the biggest opportunities? Because embedded finance really is this umbrella term that brings together embedded payments, embedded insurance, embedded lending, you name it. I think that in the not too distant future, if you're a small business, for example, looking to take out a loan, you will no longer go to your bank. Right? You will go to a particular platform where you're already spending a significant chunk of your time, and the ability to effectively go from banks being very reactive to being more proactive, to actually being predictive, is a big trend that is already happening now, but I think that's going to continue going forward. I think if you look at, so the study that we did was largely focused on the US market, because the embedded finance space in the US is a lot more mature. It's just a matter of time before you start to see a similar trend happening in the UK, in other parts of Europe, in Asia, in various other parts of the world. But I think the ability for embedded finance to really, really shake up the industry, and I think it forms a significant threat to customer primacy, especially if you're an incumbent bank. That is one thing. And also from an investor perspective, we see a lot of money flowing into that sector, a lot of new, really, really exciting businesses that are popping up. And we're doing a ton of work in this space with many of our incumbent clients at the moment who, again, are trying to understand what does this mean for them as an organization, figuring out where to play, how to win, what capabilities are required in order for me to be a successful player in this space. So that is one thing that really, really stands out for me. I think another thing that I'm particularly excited about is, on one hand, the small business sector. It's interesting, right? Because for so many years, everyone has been talking about the fact that the SME sector has been massively underserved by the incumbent banks. But only in the last couple of years, we've seen some really, really exciting innovation in the SME space. And it's interesting to see as well that some of the neobanks focusing on that segment are doing really, really well, are rapidly gaining market share, and are really challenging the dominant position that many of the incumbent banks have had in this space. And based on a lot of the work that we're doing in this space, again, in different parts of the world, SME is definitely one of the key priorities for many of our incumbent banking clients. Because they realize that they've massively underinvested in this space. It's been very, very hard, given the cost of serving that segment of the market, to turn it into a profitable segment. And the experience tends to be very, very poor. It's basically just a retail plus offering that many small businesses get. Then another area that I'm very, very excited about, we're seeing a lot of exciting innovation happening, is wealth, the wealth tech space. Very similar story to what I was just saying about the small business segment. We've actually, in the past couple of months, seen a fair few requests from our incumbent banking clients to support them with wealth M&A. So really helping them to assess the market, looking for interesting partnership, investment, acquisition opportunities to really accelerate and improve their wealth offering. So that's an area where it is still relatively early days. But I think in the next 2 to 3 years, we're going to see a lot of interesting and exciting innovation happening on that front. And then again, looking outside of the UK, you will have heard the announcement about open banking now finally becoming a thing in the US. I'm really, really curious to see how that's going to play out. But then, to me, I think if you take a step back and if you look at all the innovation that we've seen in the fintech space in the past couple of years. To what extent have we really fundamentally changed the industry? Well, if you look at the significant numbers of people around the world that are still unbanked and underbanked that we need to bring into that financial ecosystem, that to me is such a vast opportunity. Right? And I think even though we've come a long way, there's still so much potential and there's still so much opportunity to really, really drive innovation across every single aspect of the financial services value chain.
Yeah, I fully agree. And actually, my wife and I recently went to Mexico. We spent a few weeks there. And while we were there, she was using her card. I won't name the bank, but she was using her card to pay. And of course, the card got blocked. When we called the bank, they said, "Oh, it's because you had to pay when you were at the airport to buy something small, and then when you got to your destination you had to do the same thing at the other airport so that our system would know that you were traveling and they wouldn't flag a potential fraud." Okay, well, great. Can you unblock the card? No. You have to wait 3 weeks for us to send you a replacement. So I mean, had we not had other cards with us, we would have been in a big predicament, right? So the reason I'm telling you this is because we keep hearing that our industry is being disrupted, that there's a lot of innovation, and yet I think the vast majority of us, at least retail customers, we still have not experienced any significant difference in the way in which we bank. What do you think is happening here?
Yeah, it's a great question, man. I think looking at if you take neobanks as an example. I think there are a large number of neobanks out there who I think have done a phenomenal job providing a customer experience that is significantly better compared to incumbent banks. But incumbent banks haven't been sitting still. Well, and I think there's a fair few incumbent banks out there who've actually done a pretty decent job upping their game when it comes to providing a better onboarding experience or a broader digital experience. Now, because of that, it also forces neobanks to then work even harder to work towards better levels of customer privacy, which is still a massive issue for many neobanks around the world. But I think you're absolutely right, because despite significant levels of investment, despite significant enhancements in the overall customer experience that many fintech players and neobanks provide, we still have a long way to go before we can say, hey, this is not 2 times better, but this is at least 10x better compared to the current experience that we're seeing. And this is also, again, the incumbent banks still have very high levels of customer privacy. A lot of consumers have refused to switch all of their banking services from their incumbent banks to a neobank. And one of the reasons for that is, on one hand, trust. but secondly, especially with the older population, to what extent is this so much better that I'm willing to shift all of my banking relationships from my current incumbent bank to a neobank, for example?
Yeah.
Right? I think it's also important to look at this through more of a VC lens. Right? So if you look at the majority of neobanks around the world, even the more established ones, they've probably been around for 7-8 years now. If you compare it to how long some of the incumbent banks have been around, right? And obviously they're being criticized for, well, you need to diversify your revenue streams, you need to build a more diverse product portfolio. Of course they should. But I think we also need to give these businesses time to be able to do that. Right? And I am 100% convinced that, given the phenomenal talent that exists in the fintech space, that it's going to be a matter of time before that experience will fundamentally improve. I also think it's interesting to look at, obviously not just what we're seeing from a banking perspective, but look at fraud and security. I've come across some fantastic businesses in this space who, if you look at the underlying infrastructure and some of the plumbing and abstracting away some of the underlying complexity, that service is so much better, and we know that that's an issue for not just many neobanks, and we know that fraud and security is a big issue for many incumbent banks as well. So I think a lot of the innovation that we're seeing at the moment is sort of behind the scenes. Right? It's not necessarily it enables a better customer experience, but I think a lot of the things that I'm also particularly excited about is the underlying infrastructure bits that are currently being built.
Right. Okay, and I think those of us who've been in the industry for a while, we've noticed a change of tone over the past, let's say, 5 to 7 years on disruption and innovation. I think first we were talking about the fintechs are coming, who cares? It's like there's no concern about that. Then some of them starting to gain some market share, and at that point, big tech started flirting with industry, and then things started getting a bit hairy. Now we see fintech, big tech sort of taking a step back, especially Google, Facebook have just said, actually, maybe we don't want to be in this space. What's the latest tune that the industry, especially the incumbents, are playing to when it comes to that different stages of the response to innovation and transformation?
I think what it tells you, Chris, is that financial services is hard. Right? And I know many banks are often being criticized for you're not being fast enough, you're not really, really innovating, and changing the organization is hard. Well, one of the reasons why it's so bloody hard is because you're a regulated entity, right? And that makes it significantly harder to do some of this stuff compared to other industries, for example. And I think if you look at some of the big technology players, I don't necessarily think that they're shying away from financial services. I think what you've obviously seen in the past couple of years is they're actually looking to move deeper and deeper into financial services without becoming a regulated entity. Right? So that's why partnerships really are the name of the game in most instances. And again, I think we've seen some fantastic levels of innovation coming from the big technology players. The thing that everyone, of course, has been concerned about, especially on the banking side, is to what extent will one of these big technology players become an actual bank? I mean, never say never, but I think the chances of that actually happening are very, very slim. But then them being at the forefront of innovation, whether that's Apple Pay, Google Pay, other examples that we've seen, and then moving deeper and deeper into, as I said to you before, that financial ecosystem, and again providing a fundamentally better customer experience compared to what currently exists, and sort of chipping away at the edges, right? That I think is an interesting development. I don't necessarily think that they're going to completely move away from financial services. I actually think we're going to see quite the opposite. And that provides an interesting challenge if you're a bank, for example, because to what extent do you want to partner with these organizations and become the partner of choice? Or do you say, well, actually, it means that we're going to have to give up a portion of our revenues, and I'd rather fight them versus embracing them. To be fair, this, Chris, I think what we've seen in the past couple of years, and to build on your earlier point, is especially on the incumbent side, you're absolutely right that in the early days, well, on one hand, the majority of banks didn't really take these fintech players seriously. And then, if you fast forward to today, now it's all about partnerships, and everyone has a corporate venture capital fund where they're looking to invest, in some of these businesses or even acquire some of these businesses. Yeah. The challenge, of course, is that if you look at the number of successful fintech acquisitions that we've seen by incumbent banks, they're not that many. And typically it leads to a culture clash. You need to think very carefully about what do you want to do with these businesses? What do you want this business to be when it grows up? Yeah. Do you fully integrate this business into the mothership? Do you continue to run it as a standalone business? And again, there are plenty of examples out there of banks who've tried to do that, but haven't been particularly successful.
And in your experience, what do you see as the main challenge between both incumbents and the new entrants to form these successful partnerships?
Well, I think it sounds so obvious, right? But being clear about what are you actually looking to achieve, right? And secondly, I think that the culture clash that tends to happen between these two organizations, there's not necessarily an easy fix for that. And I think the majority of fintech founders didn't necessarily set up their company to then be acquired by a large incumbent bank. Well, especially if one of the goals was to go up against some of the big boys. And therefore thinking about what are some of the key things that are required in order for this particular business to continue to thrive. And as I said to you before, I think that there's also a fundamental difference between do you fully integrate this, that particular organization effectively goes away and you fully integrate this into the mothership, or you run it as a standalone business. But then you also need to be very mindful of the fact that in order for that business to thrive, it needs funding, it needs autonomy, it needs an acceptance within the mothership that it requires a different skill set, a different set of capabilities, a different mix of talent. And I don't necessarily think that many organizations have managed to get this right. And it's also quite frustrating because if you are one of those businesses that gets acquired, and suddenly everything changes, you're not necessarily being able to use the tools that you used to, because now you work for a large bank and certain things just aren't possible. But I also think it's important for both organizations to find some middle ground. And again, this is all part of the due diligence that I think you need to do on both sides, really, before you decide to get acquired as an organization. But also from the banking side, to what extent do you fully understand what you're signing up to, and to what extent do you fully understand what is required in order to make this acquisition successful?
Right. Okay, let's shift gears a little bit and let's talk about the Nordics. Because as you know, we're a Nordic-based organization. We cover the entire Nordics spectrum. And the Nordics are very hermetically sealed, right? It's a very homogeneous group of countries that share a lot of values. It's a lot of history. My question is, what have you seen in other regions around the world that you think, based on Bain's presence in the Nordics and Bain's basically global coverage, that the Nordics could learn from?
Well, I think first and foremost, I need to give you and the team credit for all the fantastic work that you guys are doing, building that community in the Nordics. I think some of the innovation that has come out of the region has been phenomenal. And as a guest at Nordic Fintech Week earlier this year, I think it's fantastic what you guys are doing. So well done. If you take the UK market as an example, and I think one of the reasons why fintech in the UK has managed to really thrive in the past decade or so, it's a combination of different things effectively coming together to really build a thriving ecosystem. Because in order for a particular sector to thrive in a particular country or particular region, what are some of the key ingredients that you need? You need angel investors to allow early stage businesses to actually set up their company and scale the business. You need VCs and growth investors to then take those businesses to the next level. You need incubators, you need accelerators, you need incumbents, and you need talent. Right? And then also, I think it's really important for the government has a very, very clear role to play. And I think in the UK, we've been very fortunate to, on one hand, have a very progressive regulator who's been really, really pro-innovation, with the FCA and the CMA. Launching things like open banking. But then again, if you look at how active the government has been really, really supporting the fintech sector, I don't necessarily think that fintech would have been as successful if it wasn't for the government, if it wasn't for the different regulators and different industry bodies coming together to really support that broader agenda. And if you look at, if you compare it to the US market, for example, I mean, take the regulatory landscape in the US as an example. It's really hard given the fragmentation that exists when it comes to the US regulatory landscape. And that's something, of course, that in the UK we haven't necessarily had. I think in terms of where to go from here, and we were chatting about this earlier. I think we are seeing some fantastic levels of innovation coming from Africa, coming from different parts of the Middle East, coming from different parts of Asia, for example. But again, I think some of that is regulatory driven. But again, you're going to need all those different factors, all those different ingredients coming together in order for that broader ecosystem to thrive.
Right, and we're seeing a slowdown in the level of investment that we've seen in fintech over the past few years. I think everyone knew that this was coming at some point, that it was not sustainable. But my question is, what are the implications of the lack of cash flow that's going into the industry, and what are the opportunities perhaps that exist in these changing circumstances?
Yeah, it's a great question, Chris. I think on one hand, if you're a startup or if you're an investor, you've been able to benefit from years and years of non-stop economic growth, and it was relatively easy to raise funds. The fact that is no longer the case isn't necessarily a bad thing. And I do think that there will be businesses that will not survive. We're obviously seeing quite a few layoffs happening at the moment. And also a lot of founders had to go back to the drawing board to really figure out, instead of pursuing hypergrowth at all costs just because you can and just because you're sitting on hundreds of millions of venture capital money, how do we actually build a business that is going to be around in the next 5, 10, 20 years from now? How do we really work towards sustainable profitability? How do we make sure that the underlying unit economics are very, very healthy, as opposed to spending a ton of money on cost and acquisition? Now, you could argue that all of those things should have happened to begin with, right? And therefore, and even though it's I mean, don't get me wrong, right? Even though it's painful to see what's happening now, I think the sector as a whole, I think we all got a little bit too excited, and that includes all players in this ecosystem. So therefore, some of the valuations coming down to more realistic levels, again, isn't necessarily a bad thing. But to your point, it also provides opportunities. And I do think that those businesses that are able to weather the storm, those businesses that have a very, very good foundation, those businesses that manage to raise funds at the right time, and have at least 18 to 24 months of runway, and therefore aren't necessarily in the need to raise any capital right now and do a down round. So I think in the next 2 to 3 years, you will really start to separate the winners from the losers. Right. But then when it comes to early stage businesses, again, we're still seeing a lot of checks being written. We're still seeing a lot of incredibly exciting businesses that are popping up at an early stage. We're still seeing a lot of deal flow happening when it comes to early stage fintechs. But it's going to be tougher if you're a more established business that has yet to figure out a proper business model that allows you to work towards.
It sounds very exciting indeed. Let's just close with circling back all the way to the very beginning. We started talking about the trends that excite you from what you see in the market. Now let's fast forward 5 years and assume that those trends have now become part of the mainstream. What's the next big thing that will follow after that?
That's a good question, Chris. As we were discussing before, I think despite the levels of investment that we've seen in fintech, and despite the levels of investment, and despite the fact that especially incumbent banks have spent billions and billions on so-called digital transformation, I think it's fair to say that I've been quite underwhelmed with the real level of change that we're seeing. I do think that, as I mentioned before, embedded finance will fundamentally change and disrupt this industry. I also think that if you look at the underlying plumbing, I mean, if you look at some of the neobanks in different parts of the world, they're effectively still being built on old technology. Yeah. But the fact that in so many different parts of the world, there's still no faster payments, for example. So, to me, I think we're going to see some really, really exciting innovation happening is in that that infrastructure layer. And basically, if you take every aspect of the financial services value chain, how do you turn that into an API? Payments as an API, fraud as an API, onboarding as an API, because that gives you and I the ability to launch new businesses so much faster, so much easier. Compared to how it's being done today, and that in itself will then unlock a whole wave of new innovation across the entire industry. Yeah, and I think the other thing I would say is what you're kind of seeing at the moment is you're moving up the value chain in terms of complexity. What I mean by that is the initial wave of innovation was all focused on, I mean, take the neobanks as an example, it was all focused on retail, it was consumer-focused businesses. Now, of course, you're seeing a lot of exciting innovation happening in the SME space. Wealth, we talked about that earlier, but still relatively early days. I think when it comes to corporate banking, treasury, that to me is where we're going to see a lot of really, really exciting things happening in the next couple of years.
Right. Well, that's definitely a future to look forward to. And well, just the last thing is just to thank you for the time and for sharing all these insights with us.
No worries. Thank you so much for having me. It was always a pleasure to speak to you.
Always a pleasure. Thank you very much, Jeff.